look at that.
Yeah, nice tree, nice forest.
There's Mark hiking out there in the middle of nowhere with his wallet filled with Bitcoins. Okay, so Mark, what a great time. You know, timing's everything to have you here with what the Fed did, everything. I mean, this is your kind of board. Perhaps the resumption of a bull market in Bitcoin, dollar beginning to break down. I know that's been a theme of yours for a long time. The only missing element so far would be lower stock prices as the Hopium is generating another charge. Looks like new all-time highs in S&Ps are a layup. So why don't we start there? What do you think of what happened yesterday with what Powell did and his statement of I believe it's a law that I intend on finishing my term, not demoted to corporal from Fed chairman. So why don't we start there with your view on Fed policy and what's going on here? Because isn't it, I know the number was terrible today, but Peter Boockvar says the Fed is S&P sensitive. No reason for them to be S&P sensitive. So something else going on.
Yeah, look, I think there's so many things going on. You bring up many of them in the sense that, the whole idea of Fed independence has been called into question. Now, there are some that would say, the Fed's never been independent. They just seemed more independent because there was more opacity as opposed to transparency. I don't know about that. I feel like the Fed clearly in the last few years has become much more sensitive to overall markets as opposed to just focusing on their two primary mandates, inflation and employment. I think they've always been somewhat cognizant of what was going on in the markets, but I really do believe that the race to the bottom, as I call it, is going on fast and furious, and it's this whole idea that everybody is cutting rates. Everybody has, low interest rates, therefore weak currencies. And that's the only way to win in a world of a shrinking pie is to, devalue your currency and get a bigger piece.
Okay. So, I want to start with, I took over the screen here.
Yep.
Because I wanted to show you what's happening. I know what's happening in yields, and just today's action, when you look at the 10-year compared to, if you see the 30-year, the 10-year is weaker. Look at the bonds the 30-year hasn't given up hardly anything. It may have bottomed last night in Asia. I'm actually looking for at least a temporary correction, if not something major in the bond market. DSI 90, dollar breaking down, I don't think it's going to be positive for bonds. You have a view on the bond market that, people, all the bears are piling into at these levels? Do you think it could be vulnerable with what's going on? People paying, 133 and change for TLT?
Look, I have talked about this for a number of years that, we're in a lower for longer period and we're in a QE forever kind of environment. And, what's interesting is we know the game plan. We know how this is going to play out because all we have to do is go to Japan and look 11 years ago into what they did. And then fast forward, and Europe is 9 years behind Japan demographically. The US is 11. And so it's not surprising at all that European yields are falling towards and actually through zero. We now have over 11 trillion with a T dollars of negative yielding bonds, particularly over in Europe. And so the whole idea that the bond bull market is over, that the bond yields are going to rise, I think is just misguided. And demographics is destiny. Old people don't buy stocks, they buy bonds. And every day, 10,000 people in the US and Europe turn 65. And so we're following this demographic path of Japan. And what's really interesting, if you go back to 2007, so just over 11 years ago.
Isn't there any difference, and I've heard this analog, between, Japan, we don't want to become Japan. We really aren't Japan. I mean, didn't Japan have a different fiscal and
Yeah, at least they're funding
background?
the spending internally. Yeah,
Yeah,
that's a big difference.
compared to the U.S., aren't there some differences? I mean, the yen is not the reserve currency. Aren't there going to be any differences where if we go the way of Japan, that the outcome might be different than
Well,
Japan
I
because
mean,
of
look,
those
there are
factors?
subtle differences, but there are always differences, right? I mean, they don't
Yeah.
have as open borders, although we're trying to close our borders. So they're more homogeneous as opposed to heterogeneous. But the bottom line is, at the end of the day, governments always overspend for millennia. That has occurred, and empires always fall. And so, Japan 11 years ago said we're going to stop doing QE. We didn't invent QE. Been doing it in other places around the world for over a century. So Japan said we're going to stop QE. They were at 26% of GDP in terms of the Bank of Japan owned 26% of GDP on their balance sheet. And they said, we're going to stop QE, market rallied a little bit, and then collapsed. And they started buying bonds. And today, they're well over 100% of GDP. And debt is 220 something percent of GDP.
That's
And for years, everybody said Japan was going to fall off the face of the earth, and Japan was going to fail, and the yen was going to fail, and it hasn't. Well, why hasn't it? It's because people still believe that there's this safe haven, either in the yen or in government bonds, and it's because in a deflationary world, just getting your money back is a win, because you win because prices are falling. And so people say, oh, well, we're different than them. Well, are we? If you look around, the world, there's a deflationary trend. It's very strong. And people want to say that, oh, all this money printing leads to inflation. It actually doesn't. It leads to deflation. It leads to slowing economies. And now with the trade war rhetoric, that makes slowing even more likely. And so you look at inflation expectations, they've collapsed.
Good segue into the trade war. I want to get there, but one other question, since you talk about deflation, an asset class that we rarely talk about here because we're traders. It's FX, it's instruments, but you talk about demographics. How about the demographics that as yuppies get older, they buy bonds, but they also pass away, but their houses don't die? Do you think that real estate will be, I knew you'd like that, homes don't die, they're still there. Do you think that this deflationary trend is going to catch the U.S. housing market to some degree, maybe not to the same extent it did in 08, 09?
Oh, no, look, it's definitely gonna catch, because millennials aren't going to buy the McMansions. Millennials are living in apartments. They're urbanizing. They have no interest in buying a 6,000 square foot house in the suburbs. And there's going to be massive deflation in real estate prices. You're absolutely right.
They keep talking about there's no supply, though, Mark. I mean, where's the supply going to come? That's all.
There's no supply. There's no supply of entry level homes. So look, I think there's going to be a bifurcation in the market, sure.
Okay.
But the reality is that millennials really, they've been raised in a digital world, in a world where you don't have to own things, you can borrow things, Airbnb, Uber, and Lyft. Why own a car when you can spend less money borrowing someone else's car and getting a ride?
That's that's a good comment on millennials, but is there any way we could talk them into using their voices and having a conversation or meeting them instead of just them being a text message?
Yeah, well, that's another issue.
Come on. I mean,
Yeah.
you know, millennials, do they ever call you up on the phone, or is everything a text?
Everything's a text. Look,
Yeah.
I have two millennials. I have two millennial children,
Okay.
and
Well,
I also have a
you
little
know,
guy.
it's good to actually meet people and be with people.
Yeah, look, there's so many things, but one last point back to your thing on bonds. You know, my friend Larry Tentarelli says something great. He says, you know, nothing good happens below the 200-day moving average, and that is absolutely true. And the direction of the surprise always occurs in relation to where you are to the 200-day. So when prices are above the 200-day, all your surprises are positive. You know, look at Shopify yesterday or whatever.
Gold.
When you're below the 200-day, all the surprises can go in the direction of the trend, negative. Now, I can't debate that there's a very nice, I don't know what you call, I'm not enough of a technician to know, what do you call an inverse of a shooting star? But there's definitely, pardon?
Hammer.
Steve?
It's a hammer.
Yeah. So there's definitely a hammer there on your 30-year bond chart. And, you know, could I see a little rally, or sorry, a little rally in yields and a little sell-off in bonds? Sure. But look, if we keep escalating this Iran thing, the demand for safe haven assets is actually going to go up, not down. So,
Okay.
you know, when we're calling each other liars over, you know, a drone mishap, I feel like I'm watching a movie. I mean, I really feel like I'm watching a movie. And
I don't think Rod Serling could have written a script that we're living right now.
yeah, exactly. Good point. Twilight Zone.
Yeah. So, all right. So, you think there's a pretty good chance of some miscalculation, or maybe it's calculated. You know, you've talked about this. Historians will back it up that when leaders are under pressure,
Yeah.
and that, you know, war is something that unites people behind their leaders. Do you think we're going to have a war with Iran?
Look, I think it's really spooky. So 2.5 years ago, right before Trump took office, I was at a conference for one of our hedge funds, and they brought in this outside speaker who was the former assistant defense secretary. And long story short, he said that over the next 4 years, we would see not the conflicts that we're used to seeing in places like the Middle East and you know, other hot spots around the world, but he said we would see problems with North Korea, the Chinese Straits, or China, whatever, South Sea.
China Sea, yeah.
South China Sea, thank you.
Mm-hmm.
And in Iran. And I'm going, what are you talking about? No, it's definitely going to be Saudi like it always is, or it's definitely going to be,
Israel.
you know, something different. And sure enough, we did this stupid, you know, creation of a problem with North Korea to then try to solve it, which they didn't solve. And so now it's just gone away. No one talks about it, you know, failed summit. Although my favorite part of that was when Trump got off the plane and the announcer, I can't remember if it was on Fox or somebody else, said, and the two dictators have gotten off the planes to meet. And they're like, whoa, I meant the president and the dictator.
Freudian.
Yeah, Freudian slip. So now here we are with Iran. And look, two things happen. When economies get weak, historically, surprisingly, or maybe not surprisingly, if you're, you know, believe in this theory, which is, what do? You go to war, because war is really, really good for economic growth. You get to, you know, blow up a bunch of bombs and drop them in the desert, and then you get to, you know, build them back up, and it's great for defense companies and great for employment. And so, look, Russia did this a number of years ago. They were going into a wicked recession after 2014 oil price crash. And what they do? They started dropping bombs in the desert in Syria, and magically their economy recovered. So,
okay. All right. So
I don't know.
Yeah, we have to be alert to so many different pots bubbling on the on the stove right now. Steve, I know you had some questions you wanted to ask Mark vis-a-vis economic issues. You want to go and do that now?
By the way, just a short comment. I mean, what Mark mentioned about wars and how they boost reported growth, and I'm saying reported growth is it comes to the question, not to the question to what I want to say before I ask is obviously there's this bad misconception which I know that Mark doesn't do that. That you get a hurricane, that's good for growth. Why? Because we get to
Rebuild.
fix again what was broken, right?
Yeah.
But that doesn't actually increase the productive resources of an economy. Actually, it expands, part of the resources to just come back to where you were. So the same is true for wars. So this is another trick to do boost indeed the GDP in the short term, but does it actually make life better for people? Does it actually, improve, the average citizen's life? No, it doesn't. It does get reported as GDP growth, but it doesn't add value to an economy. What I wanted to ask is, what do you think the long-term repercussions? From what I understand, you don't think that inflation is going to be a long-term repercussion of this monetary policy. There we disagree, because I do believe that, yes, demographics play a huge role, but I do see the Fed and the rest of the central banks being very arrogant, believing that just because of demographics, they can go to QE infinity and everything is going to be all right. But I do think that, it's not probably going to be that easy. But what do you think? I mean, what do you think the long-term repercussions are going to be with, following this kind of monetary policy and fiscal policy imprudence?
Yeah, look, I think that the challenge for all of us is trying to understand and make sense out of the greatest monetary policy experiment in the history of mankind. And it's hyperbolic, but it's true. If you think about every other experiment of this type in monetary largesse and profligacy, it ends in hyperinflation. And so that's what everybody's focused on. They're focused on, Weimar Germany or Zimbabwe or Venezuela. And I think what they miss with that is those were, weak countries, minority countries in terms of stature in the world. And, yes, when a government that's weak and doesn't have a lot of relationships, and when the top of that government, I call it the dictator playbook, where the dictator playbook is to gather all the assets to your friends and your cronies, and then to systematically destroy the currency so that you become very, very wealthy. That's the plan. And so, I don't think you've seen that in Japan. I don't think you've seen that in Europe. You might actually be seeing it in the US. I do worry a little bit that there's so many similarities to the dictator playbook going on in the administration today in terms of, passage of laws that favor a very small group of cronies, using executive privilege to do things that the Congress would say, no, that doesn't make sense. It's not for the greater good. So I do worry a little bit about that.
And having fewer friends, as you said before. Strong nations have relationships.
Yes.
And friends. And, we've talked about like the Plaza Accord. It took coordination of many central banks to do this. I don't think there's a will or even a way for central bank cooperation anymore. What do you think?
Yeah, but I agree with. Well, here's the thing.
Central bankers, maybe they're a club.
Yeah, central bankers, I think, actually do still collaborate, and I do still think. Look, I think Christine Lagarde runs the world, and nobody pays attention to it. But she's in charge. She tells which central banker who's going to hold the baton, meaning which one has to be in the penalty box of a strong currency. and then they pass the baton to someone else so they can have the strong currency and the other people can weaken their currency in this race to the bottom. So I don't worry so much about the central bankers. What I do worry about is this notion that inflation can happen quickly because there's all these reserves that have been created sitting on bank balance sheets, and somehow they're going to get into the marketplace. And the reality is they just haven't. And why haven't they? Well, it depends if what you believe about why those reserves were created in the first place. If you actually believe that the central banks are printing money for the express purpose of getting that money into the economy and boosting inflation and boosting economic growth, then yeah, you should be worried about inflation. But if you take the other side, which I do, which is the only reason those reserves were created was to bail out the insolvent banking system after the global financial crisis, then you have a different view. And what you've seen is, loans have not gone out as quickly as people would have anticipated. Monetary velocity has collapsed down to depression levels like the 1930s. And I think we're much closer to a 1930s-esque economic environment than we are to a 1970s-esque economic environment. And I think when you line up demographics, economic policy, last time we used QE was in the 1930s. We tried to get out of it in 1937. I can make a very strong argument that we're exactly in 1937.
Because the Fed was tightening then, right? Didn't they?
They tried. They tried.
All
and
right.
they failed, right? They tried to tighten 25 basis points. Think about that. They tried to tighten from 0 to 25 basis points. They triggered a 50% decline in the equity markets,
Right.
And they reversed, and they went back to 0.
I think the exact same thing would have happened if, in this occasion, when the Fed tried to hike rates, if it wasn't for expectations changing on the economy due to Trump being reelected and the fiscal stimulus that came with the taxes. I think that the Fed would be completely incapable of hiking even 1 or 2 times.
Look, I think we are exactly in a 1937 to the early 40s kind of environment, which actually quite frightening.
Could it be both, Mark, that first experienced the 1930-esque type of environment? Because, people forget how long lag time is on Fed policy. And for the next several months, I don't know, maybe even a year, even if the Fed begins to cut in July, we're still into the effects of a few years of quantitative tightening, right? So,
absolutely. It's a really important point.
Okay, so if they reverse, it could take a couple years before that stimulus plays through the system and starts to have impact.
Well, think about it, right? People are reacting to the announcement that maybe in 2020 the Fed will cut, and somehow that's good for equity prices. But what they're ignoring is the fact that, David Rosenberg has a great quote that, all cycles die. You know how they die. The Fed puts a bullet in their forehead. The Fed put the bullet in the forehead of this economic cycle 18 months ago. And there's a 36-month lag, to exactly your point, Dale. There's a 36-month lag between monetary tightening and economic decline. And every single economic indicator, every single one, is rolling over hard and is going to slip into contraction here. And so what people are ignoring is the reason the Fed is going to have to lower rates at some point is because we're going to be in a recession. And recessions are bad for stock prices. They're bad for growth. They're bad for employment. They're bad for all these things. And it's amazing to me the just ridiculousness of saying, oh, but confidence is high. Well, of course confidence is high. Confidence is always high at the top. Or unemployment is low, or unemployment is low. Well, of course it is. It's always low at the top. And it's not different this time. And we're not in a new paradigm. And all this talk about, they're going to be different because we have all these policy tools. We've always had these policy tools, and now we've abused the policy tools. But the bottom line is we restricted credit and monetary growth. So monetary growth slipped to sub 5% for the first time in decades. And Raoul Paul has this great chart, and he's tweeted out a number of times, and it basically shows a near perfect 36-month lag between LIBOR and economic conditions and GDP growth. And LIBOR spiked 300% 18 months ago, and we're 18 months away from a trough in a recession that's going to be a doozy. So
okay, all right. So we've Steve, you have your answers for Mark?
No, because we shifted the topic. Nothing is free, Mark. So what do you think are going to be the long-term repercussions of such an imprudent, monetary policy?
Look,
I don't think it's going to be inflation. Okay.
I don't see inflation because I don't see the velocity of money rising, and I don't see demand for credit rising because an aging population doesn't start new businesses. They don't invest. They don't buy. People who are 65 to 85 save, and occasionally they travel and stuff, and that's great. But the average 65 to 85-year-old is not very productive. The way we define productivity, 45 to 65-year-olds are very productive. 25 to 45-year-olds are not productive either. So we've got this terrible demographic situation. So we're not going to get the multiplier effect of normal economic growth because of demographic support. Then we've got the negative multiplier effect of, we haven't even talked about the deficit, right? The dumbest thing you could possibly do as an economist or a policy person is to expand the deficit at the end of an economic cycle. Absolute suicide.
Tax cut.
Which is exactly what we've been doing. I mean, the US is running a record deficits, theoretically speaking, at the end of an expansion. I mean, this is amazing.
No, it's suicide. It's that just shows a couple of things. One, the economic ignorance of the people in power. Arrogant. But two, it's the fact that what I always say, there are no parties anymore. There's just in power and out of power. And when you're out of power, you do or say whatever it takes to get in. And when you're in, you do or say whatever it takes to stay in. And so, this guy likes power and he wants to stay in power. So he's going to do whatever it takes. And if that means, cutting a deal with corporations to, I call it stealth QE, right? The Fed's not allowed to buy stocks. So what do? You go to a bunch of companies and you say, look, I'll cut your tax rate, but here's the deal. You have to buy back your stock to pump up the stock market. So I look like a hero. And that's QE. Any way you slice it, that is the same as the Fed buying stocks or the Bank of Japan buying stocks or the Swiss National Bank buying stocks. And if you look at, what was supposed to happen with tax cuts, we were supposed to have an increase in revenue, the old Laffer curve, which Trump's giving him the economic medal of freedom. What a joke that is. Revenues are down year over year, 26%, an absolute collapse. Deficits are up. And we're supposed to also have a boom in CapEx, which we haven't had, because all the companies are doing is buying back their stock, which is what they were forced to do in order to get the tax cuts. So the only people that benefited were the rich guys at the top of the organizations that issue themselves stock options at cheap prices. That's and right. Then buy the stock
all
back
used for financial engineering.
Yeah. So I'm pretty cynical. I'm pretty cynical on the whole thing. So to answer your question, what are the repercussions? I think the repercussions are slower economic growth, more income inequality, more bankruptcies, more negative growth in the economy over the next couple of years, and a really long, drawn-out period. I hope it's not as bad as the late 30s and into the 40s, which we all know was the Great Depression. Forget recession. But look, we're making all the same mistakes about either of the 30s.
Well, the Great Recession wasn't great for me. Mark, I think people are going to think, well, oh, you know what, Dale's gone, he's gone off the reservation with a question like this. But I just get the feeling, the way you talk about dictators' playbook, et cetera, it's something that's been in my head. And people have talked about this way before Trump and going all the way back to the Patriot Act. You know,
Yeah.
the president has a lot of power, so he loves power. Will he leave if he loses the election, or will he use the powers to call out, call off, suspend the election, maybe martial law? Is he going to leave if he loses? What do
Oh,
you
look,
think?
it's a great question to ponder, and I think it's actually pretty reasonably
Scary.
likely that he is going to lose the election. You know, there are a number of credible candidates that I think could poll much better than him. You know, Pete Buttigieg to me is my favorite. And some people think he's too young, but I think he's absolutely brilliant and a great choice, great leader. So I do think there's a chance, a reasonably likely chance that Trump loses. But to your point, could he just say, "Hey, you know what? I'm not." Could he pull a Maduro? I think it's absolutely possible. And look, the world has gotten stranger and stranger. You know, look what's happening in China. China, you know, Xi is supposed to, you know, be done after this term, but he appointed 6 people to the Politburo that are all next party Congress will all be above 65. The only person below 65 will be him. So technically, the president has to come from that 7-person group. And so he's set it up so that he has to be president, even though he's not supposed to. Now, China's a little bit different. It's not quite the same, but are people all around the world doing things that defy logic? Yeah, we're seeing lots of it all around the world. So
Norms.
I wouldn't be surprised at all to see that type of environment. I do think we have a few more checks and balances here, I hope. But that wouldn't surprise me in the least. I mean, look, it's like look at this Jerome Powell thing. Okay, it's very clear what the law is.
Right.
The president has no power to demote, you know, the person that he appointed, by the way, from Fed chair to a governor. No, there's no precedent, no way legally to. But even though that's come out as, okay, everybody's checked and that's the, he still claims, right? I can do whatever I want. I can do it. Like, well, but you can't. And so we are in a surreal world, you know, surreality. I've been calling it the new abnormal, but I think it's actually gone from the new abnormal to this surreality. It's like, it literally is like watching, you know, reality TV or surreality TV.
Okay, so you're going to stay in the country and ride this out?
That's a great question. So one of my friends has relocated to PR, which is still the U.S. technically, right. I guess, but
with tax advantages too.
Yeah, huge tax advantages.
Who's that? Harry Dent?
Actually, Harry has done the same, and John Malton's done the same. But they're just a close friend. But a number of people have done it, and that's not far enough. You know, you got other people.
Too many,
you know,
there's too many people on that island to call that a haven, as far as
I know. Anyway. My mentor years ago set up shop. Julian Robertson set up shop in New Zealand. That's pretty far away. And that has the other benefit that no one talks about, that it's the only place.
You're gonna ride it out in North Carolina. I know you.
Yeah, well, look, I like the idea of New Zealand because it's the only place on the planet where nuclear fallout wouldn't hit, which I think is kind of interesting.
Well, do you know who Martin Armstrong is?
I know that name, you know, for some reason.
You know, he's he's called, you know, one of the greatest forecasters, and he went to prison because they said the CIA wanted his numbers. Anyway, he talks about New Zealand, Scotland, and I forgot the other country, but Scotland's one of them. So why don't we wrap it with something so close to your heart that I think you have a B written on your heart. I know that there was definitely a sigh of relief for you and some validation that I think I tweeted you and I said I did my first crypto trade. I bought GBTC at $4 and
love it.
Got out of it too early at 7 because I don't know how to hold anything. But to me, this looks like it could be the resumption of a bull market and we'll take out that 18,000, or I would love one more break. You see the chart I have up there? I'm showing someone I interviewed talked about a ghost month in August, and the Asians are real big in it, where they don't trade as much, and maybe if things are under pressure into the fall, there's one more pullback in Bitcoin. But I'm assuming you're looking for the high at the end of 2017 to be taken out.
I mean, I believe that we're in a long-term bull market in this asset. And the reason is because we're in a race to the bottom in all the other global currencies. And what people forget is, if we put up a chart of Bitcoin, just Bitcoin, right?
Yeah.
No,
Daily,
I mean,
weekly?
No. Your chart's fine. But if you just put up a chart of Bitcoin, which doesn't exist, right? One Bitcoin equals one Bitcoin. So it would just be a flat line at one.
Oh, okay.
Every time we put up a chart, it's relative to something else. And so if the chart that you show right there, the ascending line, right, is Bitcoin relative to the dollar. And what that's showing us is not necessarily Bitcoin getting stronger. It could be that the dollar is getting weaker, or the dollar is getting less valuable.
Less confidence in it to hold.
Yeah, I mean, so there's all kinds of nuance anytime we talk about, because if you look at the price of Bitcoin in Venezuela or in Zimbabwe or in Argentina, okay, it never even had a bear market. You go all over Latin America, Bitcoin prices never had the bear market that we all experienced relative to the dollar last year in 2018. So it all depends on kind of where you are and what you're crossing it against. And so what I find, I tweeted this out the other day, is if you take the long-term gold chart, like the super long-term 140-year gold chart, it looks spooky, just like the Bitcoin chart. I mean, from the 70 and 80% declines, from 1980 to 2000, gold fell 70% and was down for 20 years before it resumed its increase. And there's all these gold bugs out there saying, oh, well, Bitcoin doesn't work because it's got such volatility. I'm like, really? You mean different than gold's volatility back in the 30s or back in the 1860s? Stores of value are measured in centuries and millennia, not in months and weeks. And so as we think about this as digital gold, and we move from an analog world to a digital world, the demand and the use for this asset, I think, is just going to rise. And so to me, I always say price is a liar, right? Price is the indication of what two people will exchange some unit of value or some number of units of value. So the price of Amazon at $1,900, that's not the value of Amazon. That's the price that two people will trade 100 shares. So 93.04 is just the price at which someone will trade a Bitcoin from one person to another. But that's not the value. The value of a network or a system follows Metcalfe's law. And Metcalfe's law says that as we increase the number of users of a network, the value of that network rises. And so you think about Apple wasn't very valuable. When there was 10 iPhones, still not very valuable. 1 million iPhones, more valuable. 10 billion iPhones, really, really freaking valuable. And the same thing is true here. Every time new people start to use Bitcoin as a store of value and ultimately as a medium of exchange, the value of that network increases. So, back in 2017, when the price hit 20,000, the value, the underlying value based on the users and all that was far below. So the price was a liar. The price was overvalued. And so we were going to have a bear market. Now, bear markets usually go through fair value and they go below. So we think it got far below fair value. And, in our fund, we have a venture capital fund that can buy a little bit in direct crypto as a network. And so we started buying in April because we thought, at $3,000-4,000, this the price again was a liar and the value was significantly higher. Today at 9,300, I still think value. I think we're still below fair value. We're closer to fair value. I think fair value is somewhere in the low double digits, $11,000-12,000.
Okay.
But it's increasing rapidly because if you look at the fundamentals of Bitcoin, they're all improving. Number of wallets just hit an all-time high. Number of users, all-time high. Size of block, all-time high. Number of transactions, all-time high. All the fundamentals, the things that you would judge any network, like the number of phones, attached to a network, or the number of minutes people use on their phones.
So this is a mass adoption cycle that we're entering here.
Exactly. And we're at the knee of the S curve, right? And so we're going from, the early adopters to the, early majority. And we've got, 75, 80% of the S curve to go. And, the long term, look, I've never seen an opportunity so clearly where the asymmetry was so perfect, right? The upside relative to the downside was so great. And people always go, oh, but it could go to zero. No. If this was going to go to zero, right? If this was going to die, it would have died somewhere between 0.003 cents and $10. That was the miracle. The miracle was not $10 to $100 or $100 to 1,000 or 1,000 to 10,000. The miracle was, 0.003 cents in 2009 to $10.
Yeah, getting off the launch pad. Once it got in through the atmosphere, different story. Okay.
Yeah, and now we have the Lindy effect, right? Which is the longer something exists, the more likely it is to grow. And it's like infant mortality. Infant mortality, if you survive birth, right, you have a high likelihood of reaching a certain age. And if you hit 65, you have a really high likelihood of making it to 80. And if you hit 80, you have a really high, chance of making it to X. And so the Lindy effect is in full force here. And we've gone from a science experiment to a novelty to, a real asset that people view as a alternative to gold to, oh, wait, this could be a base layer of Internet 3.0. And as I say, this is just technology. And it follows the technology cycle. 54 was the mainframe, 68 was the microchip, 82 was personal computer, 96 was the internet, 2010 was the mobile net, and 2024, which is still, 4.5 years away, is the trust net, or the Internet of Value, or the Internet of Things, whatever you want to call it. But that's going to be when every major company in the world will run on a blockchain, and the first trillionaire will be created from the wealth created from this, the same way that the first multi-billionaires were created with the wealth created out of the internet and the mobile net. And it's an exciting time to be involved. And I feel badly for the people that focus solely just on price day to day and get all nervous when it has volatility. We love volatility. Volatility is how you make long-term gains. We want volatility in an asset.
You're one of the most effective ambassador spokesperson for the cryptocurrency world, Mark. And I've really enjoyed.
I appreciate that.
I've really enjoyed seeing your appearances on CNBC, and always eye-opening for me to talk to you for 30, 40 minutes. And I want to thank you from myself, Steve, and the community for edifying us once again and bringing us up to date. You really are a voice of reason in, as you say, a surreal world, Mark. So thank you for what you do and all the insights and straight talk you give in a Meshuggah crazy business, Mark.
Well, I appreciate the kind words. I really enjoy our conversations. I love Steve's questions and holding my hand to the fire when I don't actually give him an answer.
Yeah.
So
you are, I've interviewed many crypto people, and you build the case to where after I hear you talk, I have to trade in my leather wallet for a metal one.
Love it. Well, we'll do it together, and we'll be able to enjoy our golden years with our Bitcoin hoard. So
okay, and let me know where you go offshore, okay, buddy?
I will. I'll save you a spot.
All right, and everyone, that's Mark Yusko, and you could follow Mark at Mark Yusko on Twitter. And the name of your company again, Mark, for people to go to your website and check it out.
Yep. So it's Morgan Creek Capital, Morgan Creek Capital Management. We also have a subsidiary, Morgan Creek Digital, but you can find us at morgancreekfunds.com or morgancreekcap.com. And at the morgancreekfunds.com, there's direct links to what we do on the digital side as well.
Okay, I wanted to ask you, do you guys have any projects that you have going on? I'm bringing up your website now, Mark, that
Yep.
retail investors could get involved in as far as, I know you handle managed money. Is there anything a guy with, say, 25, 50 grand could do with you guys?
Yeah, the only challenge for us is, because we deal in quote unquote alternative investments,
They
we
have to
do
be credited investors.
yeah, we're still subject to the accredited investor standard. I did, Jay from the SEC did say yesterday he is open to the idea of changing that. So let's all work on lobbying to get him to do that.
So for
But
people to get into this digital asset index fund, they have to be accredited investor.
you have to be a accredited investor, and we're working on that, trying to find ways to. We do have one. Well, actually, everything we do is either accredited or qualified, but we try to get as much available for accredited investors as we can.
Yeah, it'd be nice to make it available for regular people that don't have 5,000K.
I'm working on it.
Outside of their home, I believe that's.
I know. It's
okay.
We're working on it. We're lobbying hard, and I've always said that the accredited investor standard was not created to protect the less wealthy. It was to protect the more wealthy and keep them having all the good ideas. So
well, good luck on leveling the playing field. That would be a paradigm shift in investments too. So again, Mark, thanks for your time today, my trading warrior brother, and appreciate all the views and insights you shared with us today.
No, thanks again. I always enjoy it, and we'll see you again soon.
Okay. Thank you, Mark.
Take care, guys.
All right. Thanks. So that's it. Remember, everyone, don't just count your Bitcoins or pips, count your blessings, and we'll see everyone to wrap up the week. Adios.